Right now, as of 1:40 p.m. Eastern Time on this Wednesday, November 12th, shares of Datavault AI, trading under the ticker DVLT, are at 153, and they are actually in the red, down about 1.8% in intraday trading. Now, that may be a surprise to many who saw the pre-market action or the initial morning pop that looked so promising, where the expectation was that this stock was continuing a strong upward trend. But the reality of this stock is far more complex and far more aggressive than just a simple daily chart. The common belief is that this is just another volatile, low-priced, AI-focused company. But what is really happening at Datavault AI is nothing short of a full-blown corporate war, and the company's management has just deployed a financial weapon that we have not seen in some time. This is not a simple story of AI potential. This is a story of a public battle between a company and a well-known short seller, a battle that involves lawsuits, aggressive accusations, and now a very creative and high-stakes dividend. The entire narrative for DVLT shifted on October 31st when the short-selling firm Wolfpack Research released a scathing report. Wolfpack accused Datavault of being a house of cards, alleging questionable practices and aggressive stock promotion schemes, essentially claiming the company's impressive-sounding announcements were not backed by substance. The stock, as you would expect, took a significant hit. The expectation was that this small-cap company might just fade away under that kind of pressure. But the reality was quite different. Datavault's management did not just issue a standard press release. They came out swinging. Just 2 days ago, on November 10th, the company announced it had filed a formal lawsuit against Wolfpack Research and its founder, Dan David, for defamation. The CEO called the report a false and misleading and a malicious and self-serving attack. This lawsuit alone created a new dynamic. It's a high-risk, high-reward move that forces a legal and public showdown. But this is not even the most dramatic part of the story. While the lawsuit was the defense, the company's offense is what has the entire market watching right now. Datavault AI has announced it is distributing a special one-time digital dividend, specifically a Dreambold Draft meme coin, to all of its shareholders. This may sound strange, but the mechanics of this move are what matter. The ex-dividend date is set for November 24, 2025, with a record date of November 25th. Here is why this is so critical, and it's a tactic aimed directly at the short sellers. When you short a stock, you borrow shares and sell them, hoping to buy them back lower. When that stock issues a dividend, you, the short seller, are obligated to pay that dividend to the person you borrowed the shares from. For a cash dividend, this is simple. But Datavault is issuing a non-cash digital asset, a meme coin, that is not traded on any open market. A short seller cannot simply go out and buy this coin to deliver it. This, in the company's own words, is designed to create an enforceable delivery obligation and impose accountability on short sellers. The company is effectively trying to force a squeeze. They are betting that short sellers who have not covered their positions by the November 24th ex-dividend date will be trapped, unable to deliver this unique digital asset, and their only recourse will be to close their short position by buying back shares, which would, in theory, send the stock price soaring. This is an incredibly aggressive and direct assault on the 23.68 million shares that were reported short as of October 31st. This brings up a key debate. What is your take on this digital dividend? Is it a brilliant strategic move to protect shareholders, or is it a high-risk gimmick? Comment below. Now, for investors, this creates an almost binary situation. It's no longer a simple investment thesis. It's a bet on who wins this war. To understand how to navigate this, you need to look at the data. You can monitor the official short interest data, which is published by NASDAQ, to see if that 23.68 million share number starts to decrease dramatically before the ex-dividend date. That would be a sign the shorts are getting scared and covering. You can also track the cost to borrow, or the borrow fee rate for DVLT shares. If that rate spikes, it means shares are becoming extremely scarce, which is another sign of pressure on the short side. Be wary, however, of chasing a squeeze. These events are notoriously volatile, and it's just as easy to be the one left holding the bag as it is to catch the upside. So, with all this drama, what does Datavault AI actually claim to do? The bull thesis and the story the company is selling is admittedly massive. The company positions itself as a leader in AI-powered data management, and more recently, the tokenization of real-world assets, or RWAs. This is the concept of taking physical or financial assets like real estate or bonds and creating a digital token for them on a blockchain. It is a hot sector. The company's recent announcements have been nothing short of spectacular. They just reported a 467% year-over-year revenue increase for the second quarter, and their guidance is what turns heads. Management is guided for $30 to $60 million in revenue for 2025 and over $200 million for 2026. This is for a company that just reported $1.7 million in a quarter. That is the expectation. The reality, and the core of Wolfpack's short report, is that these numbers seem almost impossible. The most recent earnings report from August shows the other side of the coin. While revenue did beat, the company's earnings per share was a massive miss. The consensus estimate was a loss of 14 cents per share, but the company posted a loss of 54 cents per share. This indicates a very high cash burn rate. This is what the bears are focused on. They are betting that the revenue guidance is a fantasy, that the cash burn is unsustainable, and that all these announcements, from the $150 million strategic investment from Silex to the RWA contract negotiations, are just smoke. When you look at the ownership, this becomes even clearer. Institutional ownership in Datavault AI is incredibly low, sitting at only about 4.9%. This is not a stock held by major Wall Street funds. This is an entirely retail-driven stock, which is why it is so volatile and so susceptible to social media-fueled narratives. The company is at war with short sellers, but it is also in a race against time. It needs to prove its RWA and AI platforms can generate the massive revenues it has promised before its cash runs out. This is a high-stakes fight. Who do you believe? Datavault's management with its $200 million guidance, or Wolfpack Research's short report? Let me know who you're siding with. Looking forward, the picture is a flashpoint. The expectation that this is a 1.53 stock with a simple long-term AI story is completely wrong. The reality is that this is a highly speculative, binary bet with a specific deadline. All eyes are on November 24th, the ex-dividend date. The bulls are positioned for a violent squeeze, believing the digital dividend is a masterstroke. The bears are betting that this is the final desperate act of a company that will ultimately fail to deliver, and that the dividend itself is a stunt that will not work. The recent volume has been massive, with tens of millions of shares changing hands as both sides try to establish their positions. The next few weeks are not about technical analysis or price-to-earnings ratios. They are about game theory. In summary, the 1.8% drop you're seeing today at 1.53 is just noise. The real signal is the battle line that has been drawn. The expectation is that you're buying a technology company. The reality is that you are taking a side in a war. The company is using its own stock structure as a weapon against a dedicated short seller, and the outcome will be decided not by a slow, steady appreciation, but by a rapid, high-stakes showdown in less than 2 weeks.